You too.
We're joined now on the phone by Marc Faber, the editor of the Gloom, Boom, and Doom Report. He is joining us now from Thailand. Happy New Year, Mr. Faber. Good to talk to you.
Well, Happy New Year to you and to all your listeners.
Thank you so much. So you are a man who, with all of the money being pumped out by central banks, who is worried about inflation. Instead of gold, why not borrow money and buy a house then? That is a great bet if you think inflation is going to take off.
Well, that might be an idea, but I had this idea 2 years ago, and I wrote about it that at that time, at the end of 2011, home prices in Atlanta were cheaper than in Thailand and in Phoenix and in Florida and so forth, and offered a great opportunity. I don't think it offers a great opportunity today. And you were just talking about rising stock prices and the political implications, as well as home prices going up and making people feeling better. But I can assure you that, first of all, according to a Gallup poll, only 52% of Americans own directly or indirectly stock. Of those, 5% own 72% of all financial assets. So rising stock prices affect the majority not. In other words, they have no impact on the ordinary American. Secondly, concerning home prices, a lot of people lost their homes, and now they have the pressure to go and rent homes at rising rents. So it reduces their disposable income. Well done, Mr. Bernanke.
So you blame Ben Bernanke for that. Well, but Mark, if people, well, let me step back. Well, why are people then, according to this poll, why are they feeling better this year than they were a year ago in America?
Well, Americans, they have this quality of being very optimistic about the future. America above everything, the American exceptionalism. But the reality is that if you analyze why the economy has improved, huge deficits, although they've been coming down on paper, but in actual fact, with the unfunded liabilities, they are running at something like $5 trillion, $6 trillion a year. Secondly, money printing. If you print enough money, it falls onto someone. It falls mostly onto well-to-do people, but then they go and spend, and they go to restaurants, and so everybody benefits somewhat. But I have to stress, somewhat.
Well, speaking of falling really quickly, Mark, if you bought gold at the beginning of the year, you've lost more than a quarter of your investment. So what do you tell those people? Hang on, you'll make it back in the new year?
I'm not sure they make it all back. But I'm saying that basically people who pursue a disciplined and diversified asset strategy, in other words, you have some money in bonds, some in real estate, some in gold, and some in equities. With that strategy, you will fare better than to buy high and to sell low.
Okay. Mark, well, that was very sound advice for this year, the new year, and any year. Mark, Happy New Year again. We hope to see you very soon.